Hello everyone and welcome to Apigee online meetup. My name is Kiki and I'll be your host today. We're broadcasting live from Google London headquarters and we are all very excited to have you joining us today. Backed by popular demand, today marks the 8th Apigee online meetup edition and our goal is to be as interactive and educational as possible. So in today's session, we are joined by Oliver Ogg and Rohan, and we will talk about driving banking innovation in the age of assistance. So first, Ollie talking about FIS disruption. We're going to have Rohan talking about the role of APIs in banking, and then we're going to go to a fireside chat. As always, we will provide you with plenty of opportunities for participating and asking questions. So before we start, few reminders. Please ask questions throughout the session. We will have a dedicated time to answer to all the questions, so feel free to submit them at any time. And also, to ask questions, use the link here or click on the Ask Question button on your watch page. Now I would like to welcome to the stage our special guest, Rohan. Paul is an author of 2 books on open banking and has a vast experience working with C-suite on the area around the world. And also Oliver Ogg. So without further ado, grab a drink, make yourself comfortable, and let's get started. Over to you, Ollie.
Thanks, Kiki. So over the last couple of weeks, I've just been keeping an eye on those that have registered for this online meetup. So welcome. But I see we've got a lot from the world of financial services, but we do also have quite a few who don't directly, at least today, work in the world of financial services. So I thought it would be a good opportunity just to take a holistic view across what we see in the world of FIS disruption and see some key themes that I think are relevant to all. So first of all, the concept of being open. So the fintechs, the digital natives are by default, as part of their DNA, open. They expose their core data, their core services via APIs so that it is extremely easy for others to work with them. That's quite different from the incumbents. So ask today, during this meetup, what is right for the business that you work in, and what's the appetite today? It could be a significant shift. Second, leveraging data. If you work for an incumbent, you are no doubt sitting on an extraordinary wealth of data that I'm sure is not being fully leveraged. Often there are significant challenges around data being in silos. So at least internally, expose this valuable data set within the business so that other parts of the business can consume it easily. But also think about these new data products that you could surface up as APIs to external participants. These can be incredibly valuable. Think about the insights that you can drive from your scale and the data on which you sit on. Third, gravitational pull. So why would others want to work with you? Now, it could be that it's incredibly easy to work with you. It could be your scale, perhaps the number of customers or the number of products and services that you offer today. Perhaps it's the unique insight that you've managed to drive out of your data. It could well be a combination of a number of these. So think about what is the unique value that you can offer to attract others. Your traditional ego is certainly not going to be enough going forwards. Fourth, cross-industry ecosystem. So we see this for 2 main reasons. The first being about maintaining relevance. So for many businesses today, in order to maintain a continual relevance to their customers, they are looking to bring additional products and services from other industries to the channels that they own that they can drive down to their existing customer base, so that as a customer, I'm more continually engaging with that particular brand. Secondly, we see it when an industry is seeing some level of disruption, And the more severe the disruption, the more cross-industry collaboration we observe. And this is a defensive and offensive play in a competitive landscape. So take a step back and consider your organization's own competitive landscape and, again, the appetite of this cross-industry ecosystem play. And last but not least, the ability to execute. So there are lots of challenges in doing this well. There will be organizational mindset issues, there will be leadership issues, there will be organizational structures, personal egos in the way. So this is not an easy thing to immediately solve. And of course, talent is hard to attract and maintain. So these are 5 very common themes that we see in the world of financial services, but certainly in other industries, and hopefully will be useful to have in the back of your mind as we explore this topic in more depth. Thanks very much. Over to you, Paul.
Thank you. Thank you, Ollie. And good morning, everyone. I'm going to talk about the role of APIs in banking. And while a lot of my comments will be specific to banking, they can probably apply to any really traditional, mature business that's been around a long time, that wasn't born on the internet, and is now seeing both the threats and opportunities from digital ecosystems. So I hope to cover 4 themes today, 4 topics, and I'm going to just call them out now to give you a chance to consider them at a very high level and maybe perhaps contribute any questions that you have to our discussion. And we have a fantastic vantage point at Google Apigee in that not only do we serve a lot of banks and financial services companies globally, but we work across every vertical. And we think there's something much bigger happening than just banking or open banking, which we would call the age of assistance, which I'll come on and describe in a bit more detail. But we think to be relevant and responsive and fast in the age of assistance, API products aren't just an optional extra. Excuse me, we think they're absolutely essential. Secondly, the world of digital ecosystems are radically different in terms of how people think and behave, in terms of growing their business and managing their business strategy and technology and managing their brands. And there's lots of discussion around mindset and corporate culture. But to be really explicit here, we're saying we think work is required on both computer systems and belief systems. Sounds a bit odd, but come on to discuss that in a bit more detail. And we think it's insufficient just to do work on your computer systems and not work on your belief systems. We think this will prevent you scaling or certainly getting the full benefits of digital ecosystems. Then I think brand is very important, brand strategy, okay, for a couple of reasons, for several reasons, in fact. Firstly, brand strategy has a much longer duration than business strategy or technology strategy. So your technology strategy or your business strategy might have 1 or 2 years to run, whereas brand strategy is very long term, 5 to 10 year thinking. What type of emotional reaction and response do we want to get from the marketplace? Far broader than just our specific products and services. And often people who are from a pure technology background say to me, banks are in terrible trouble, or the banking industry is in terrible trouble. Their user interfaces, their user experiences aren't good. They must be out of business in a few years. And my response is, well, we need to reflect on that, because the banking industry, based on which historian you believe, could be up to 4,000 years old. So it has thrived and survived many evolutions in technology. So we have a view from much observation that maybe the brand purpose of financial brands won't be changed hugely by digital ecosystems, and however, brand audiences will be changed in a very radical way. And then lastly, what will be a great financial brand experience in the era of digital ecosystems and in the age of assistance? And we think that the financial brands that treat developers as customers and approach them entirely as they would approach customers are the most likely to scale and succeed in this world. So firstly, what do we mean by the age of assistance? And in the context of that, we think it's very much a hyper-connected world, and we would define this as that it's impacting all services, not just financial services, and that customers are now expecting their favorite brands to work together to provide connected experiences in digital ecosystems. And if that sounds a bit far away or theoretical for a traditional financial services company, you need to consider many aspects of this, but focus in on customer journeys. So how does your company define customer journeys? Is it a long time since you've reflected on what they mean? Do you mean customer journeys by they knock on the door of your store or your branch, or they knock on the door of your proprietary digital app, and then customer journey management is ushering them to the right solution, the right product to consider, the suitable service that you have for that stage of their life cycle? The big concern for companies that are adopting that mindset is that there's a new generation of buyers, whether they are young consumers or young businesses, who are on a journey through a digital ecosystem, and they expect their favorite brands and favorite providers to collaborate and provide a connected end-to-end experience. So in reality, they're on a journey through the ecosystem, and if you wish to serve them and remain relevant and one of their favorite brands, you need to push your services out there into that environment and let them use those services through whichever interface is suitable and appropriate and contextual. So in that context, rethinking what you mean by a customer journey and focusing in on the young generation and how they see customer journeys causes a major rethink of not just your brand strategy, but also your business strategy, your business architecture, your technical strategy. And if all of these things are going to work, your mindset. And this mindset needs to be shared right across the organization, across all key roles, from the top to the bottom. We talk to many banks about digital transformation, and often their focus can be quite narrow, and they believe that transformation involves using new technologies and doing new things and doing things in new ways. And often we have to remind them that transformation is a combination of two things. It's both starting the new ways, doing new things, doing it with new technologies, but also effectively stopping the old ways, stopping using the old technologies, stop using the old methods. And it's useful to consider the age of assistance from this perspective. So we would argue very strongly that in the age of assistance, only API-enabled collaboration is going to help you keep up and is going to be relevant. So look at some of the ways in which a traditional financial services company, or indeed any traditional organization, might partner. And they would have historically focused on things like joint ventures or strategic alliances. And a joint venture is incredibly precise in that a separate organization is set up to do it, but it's plagued with problems. It's very slow to get together. You can have a clash of cultures inside the new organization from people from two different organizations. It takes an incredible amount of pre-planning, and if it doesn't work out, it's very hard to exit. Strategic alliances aren't quite as rigid, but they're very, very loose. They're slow to get to market. You're assembling projects inside both organizations, and it's tough enough to assemble a project inside one organization, but to collaborate across two organizations using projects is incredibly difficult. So very hard to coordinate and ambiguous about who's doing what. And the crucial flaw that both of them share, apart from being slow or rigid or loose, is that it's not reusable. It's specific to that collaboration. Whereas API-enabled partnering, the investment is reusable. So you try out an API with one partner, turns out to be a good API, but the wrong partner moves swiftly on to the next one. It's fast to market. There's automated processes behind the APIs, which everyone can trust. There's automated fast onboarding. Companies that go partnering use the APIs move from onboarding of partners that last months into onboarding of partners that last hours. And there's low barriers to exit. The investment is reusable. You can move on to other partnerships and other ideas and other collaborations incredibly quickly. And within this world, you can come across unanticipated opportunities with your APIs that no one in your organization could have imagined before you publish those APIs. So we have a strong view about the age of assistance. We think it straddles all verticals, not just banking. So we sell API management software. You buy our software, the problem is sorted. That's not the case. We think there's a lot more to be done than changing computer systems to handle APIs if you wish to be successful in this world as a financial brand. So on to belief systems. And we like to think that we are incredibly clinical in our business environment, that we make every cold-blooded, analytical, economic decisions. And that is the case, but those decisions are built upon a base of assumptions and beliefs about how the marketplace works, how to grow in the marketplace, how to present services to the marketplace, how to segment the marketplace. The crucial thing about belief systems is that they are systems, that people believe all elements of the system, not just one. It's not a pick and mix where they can select. So in that context, we think the age of assistance and the digital ecosystems that are serving in the age of assistance does require quite a radically different belief system, a set of beliefs that are not only relevant and effective in isolation, but all connect to each other, and that these beliefs drive a common set of behaviors and assumptions right across the organization, which means you can scale cohesively whatever technology strategy you're pursuing or whatever business strategy you're pursuing. So for fun, this harkens back to those old TV ads for soap powder. Do you prefer brand A or brand B? But let's consider financial brand A and financial brand B that are looking at the world of ecosystems. And let's hypothesize that brand A has bought themselves a brand spanking new computer system, an API management platform for ecosystems, but there hasn't been a general discussion and revision of the belief system. Why are we doing this? How's the market going to operate? How should we present ourselves? And then brand B, which is not only working on its computer systems, but is having a long and deep and broad discussion from the top to the bottom of the organization about what they should believe about ecosystems and how this is going to guide their decision making. So a simplified, but we think effective summary of two belief systems. You can tell we have the one we like in green and the one we're not so sure about in red. But the way to read this slide is down in sequence. So belief systems are systems, and all of the individual beliefs connect to each other. So there's many traditional services organizations which for the last 20 or 30 years, if they were asked what do they believe about innovation and business development, they would say, well, it's the job of our staff. And because it's difficult and slow and we're doing everything ourselves, we tend to focus on large market segments to make it economic. And if we're a bank, we try to have banking products that are better than our peers. And we have to control the distribution pretty much up to the point of sale. And because we're doing everything ourselves and we're using projects to collaborate with partners, we can handle a small number of partners. And because we believe our logo is our brand and drives recognition of our brand, we want our customers to always use our digital interface. And we broadcast loads of marketing messages to try and get them to come to that interface. And this is not a common belief system amongst many of the more modern services companies that have grown up, whether they're fintechs or other types of new services companies. They have an entirely different set of beliefs that all hang together, that they want their ecosystem partners to drive the innovation, and that they want to be in ecosystems of collaborating enterprises that can reach very small market segments that they couldn't reach on their own, and that their brand experience is driven by how the brand behaves inside an ecosystem, and the crucial skill for distribution is orchestrating the behavior of partners, and that APIs are fantastic because they allow you, when you use them as products, to manage very large partner population to drive your growth. And if we think back to the 1960s and the use of the development of the marketing mix, which had 4 Ps initially: product, place, price, and promotion. These companies believed that the P for place is the digital interface that happens to be convenient for the customer at that point in time, doing what they're doing in their daily lives. So in a banking context, the P for place has changed from the digital interface that the bank prefers to the digital interface that the customer happens to prefer. This is a profound change, which gives rise to significant changes in computer systems and overall belief systems. And these organizations that operate with the belief systems that's orientated towards ecosystems, they're not obsessed with their brand as a logo. They're obsessed with getting the meaning of what they do and, crucially, why they do it, to communicate it to their end users so that they can form an emotional bond with those clients, so that those clients will go looking for those services as they go about their daily lives. So radically different belief systems, and we believe that the banks that work on just their computer systems and don't consider their belief systems for ecosystems will struggle to scale because they'll have a highly incoherent internal environment about how exactly they're trying to grow and innovate and partner. So this is a simple graphic we use in Apigee around the digital value chain. And this is the old digital value chain and brand audience as we see it, which is financial brands pushing out their services exclusively, by and large, through their own brand app and trying to both provide services and form an emotional brand with a brand audience made up of customers. We think this is the expanded digital value chain for ecosystems, and it expands the brand audience, where you're trying to get the same message about what you have, but also why you do it. That message out to both developers and customers in this environment. And that's a crucial thing, because the brand specialist will tell you that what you do is important for your services, but what creates long-term emotional connections to your clients is that they understand why you do it. So you need to get that message of why you do it, and why it's valuable for society and the economy and for the customer out there, and have developers buy into that too. So if you're a financial brand, these are the type of brand messages that are broadcast and that company tries to live up to every day, which is they're on a long-term journey with their clients. They want their clients to prosper, sleep easily at night. They want to protect them from harm. They want to be the financial experts. They want to be available where their clients need them. They want to introduce relevant other services. These are parts of the brand purpose of a bank that can go back hundreds of years, and they will go forward hundreds of years into the future no matter what technologies evolve. But in digital ecosystems, the same experience of the brand needs to be experienced by third-party developers who should, by using the developer program at the financial brand, feel that the financial brand is on a long-term journey with them, helping them prosper, helping them sleep at night, being the financial experts, being analytical about the use of APIs, being structured, protecting them from harm in terms of how the APIs are managed, being available when they're needed, and connected to other wider services. So, same financial purpose in broad terms for financial brand. Their job is to look after the financial concerns of people in the economy and in society, but digital ecosystems radically expands the brand audience. So financial brands compete with each other, and they need to compete to become the favorite brands within the ecosystems, both for their customers and for third parties. And we would argue that the best approach inside your traditional financial brand is to have the same belief system for customers and developers. Developers are customers. So it's useful to explore that topic in a bit more detail. So in that context, it's absolutely natural for bankers today to go to work in the morning and without setting out their assumptions or their belief systems, every task they do that day is based on this belief that they want as many customers at the entry level of their service offering as possible, as many as possible at entry level. And they want feedback from the customers, good, bad, and ugly feedback. They want it so they can improve. They want to pay particular attention to the most valuable or strategic customers, the most active ones, the most profitable ones, the most promising ones. This is a natural assumption that underpins decision-making every day. They want to assign suitable staff to deal with particular types of customers with the right qualifications and skills and attitudes and temperaments. And you want your customers to be prosperous. A financial brand wants prosperous customers because that's the key to prosperity and profit for the financial brand. You want to onboard customers quickly and easily, and you differentiate the services that you offer customers. And every day, without specifying that this is the underpinning belief, bankers set about solving problems for their customers. We would argue very strongly in the world of digital ecosystems that the exact same philosophy around your brand experience should be applied to third-party developers. You want as many as possible at the entry level. And we find many bankers and traditional companies getting hung up on this. And we try to say, listen, you want to start with, it's just like funneling customers. You want as many possible customers at the top of the funnel, and then you filter them. You want as many possible developers at the top of the funnel, and then you filter them. And that should be the goal of your developer marketing program. You want their input. It's going to be tough for some traditional companies when they first begin their developer program. And even if they manage the APIs very well, They are providing a gateway into potentially old systems or new abstractions of data from old systems. You will get some very, very tough feedback, but that feedback loop is going to be absolutely essential. So we see many banks that are incredibly slow getting mobilized, and they're very anxious about the end state of where is this all going to end up in terms of new market structures. And our encouragement is, listen, you have to get started. You have to create that feedback loop. You can't stay here theorizing about how this is going to work for another 3 years. You need to get started. You'll get feedback, good, bad, and ugly. The bank that gets started and starts to mobilize and gets the most feedback will refine their offering, will get stronger, and will form a queue of developers and will start to generate network effects. You want to filter your developers, get the most influential and profitable ones. And in terms of that filtration, monetization is a tactic. We see many banks getting hung up on the idea of API monetization. I want to be paid for all my APIs. I want to know who's going to use them, how much they're going to use them, with what volume. This is not effective. Consider how banks consider bank fees. For certain segments of the market, like startups, businesses, or university students, they don't charge fees or they charge lower fees because these are strategically valuable market segments in the long term. Other banking customers get discounts for using a lot of banking services because they're using them at volume, so they get a volume discounts. Other fees are decided and charged based on the nature of usage, the volume of usage, the future potential of usage, and in many cases, highly valuable banking clients that do a lot of borrowing or do a lot of depositing don't pay any fees. The exact same principles apply to API monetization. It's a tactic. If there is a developer that's driving a huge amount of business traffic that allows lots of deposits to be taken in or lots of new lending to be done, then you can be quite relaxed about how much you charge for the use of the APIs. You're getting lots of valuable referrals. You don't need to charge that developer for API usage. So it's just a tactic, and you learn as you go and you'll refine your pricing tactics around APIs. Crucially, you want developers to be prosperous, just like you want your customers to be prosperous. And this is something to focus in on because we see some banks getting very hesitant in case third-party developers combine their banking APIs into third-party services and have a big success, and bankers feel that in some way we've lost out on a big opportunity, even though we would never have had that idea ourselves, or we would never have collaborated with that partner ourselves. And they need to get over this because there's no better developer marketing than having one of your developers have a big success with your APIs. You want a big queue of developers to follow. You want as many developers as possible at the entry level. You need to onboard them quickly and easily, just like customers. And just like banks try to differentiate their banking services, you need to differentiate your APIs, make them faster, make them more data rich, make the documentation better, make the people who manage your API program more progressive, more knowledgeable, make them more better relationship managers. And in this evolution, because banking is thousands of years old, bankers will come to the office and the only difference will be is that they'll want to solve problems of both their customers and third-party developers with the same energy and the same purpose, because they'll be part of their brand audience and they will serve their brand purpose and will drive new growth and new innovation and partnering for banks and financial services companies in digital ecosystems. So they're strong conclusions that Apigee has derived from its fantastic vantage point in the marketplace across all verticals. There they are again, delighted to deal in our Fireside Chat if people have questions or ideas related to these. Okay.
All right. So now let's pause and get some questions from the audience. And once more, to ask question, please use the link here or click on the Ask Question button on your watch page. So the first question here, some people say ecosystems will turn banks into dump pipes. What do you think about that, Paul?
Thank you, Kiki. We get this question a lot, okay? And sometimes we have to try and unpick it of what do you mean by dumb pipes. But in many ways, we see it as a cultural reaction to new customer journeys which other companies are generating, and a feeling that if you're not in full control of the entire journey yourself with your logo on the front, that something major has been lost. And all we can do is step back from that and ask, well, forget about pipes. What might be dumb going forward? Okay? And coming back to the age of assistance, where young people are increasingly used to these connected journeys with their favorite brands collaborating and providing a seamless experience, where they might end up buying several things from several companies, but it's been one connected experience. You have to ask yourself, is it dumb to broadcast messages to those young people, those young businesses that are becoming increasingly enmeshed in this world, saying, come and look at our proprietary app. Come and look, break the chain, break your concentration, break the convenience, and come and read up on what we have, and you'll probably find it marginally better as a core product than something you've just bought. Too late. Okay, so in the context of that, we would say step back, because it's a very emotional statement, and ask what in this, there's an environmental change coming, but financial services are still very valuable and rare. It's very hard to get a license, particularly to take deposits. Highly regulated, you need a lot of capital. This is not a business that many organizations will get into easily. So in that context, we ask banks to separate the core purpose of what they do as bankers and how all services are changing. And once they step back from that, we find the question of dumb pipe will be a dumb pipe, is far less sinister. And then they start to see the upside, which is, if I'm not fully in control of the customer journey, yes, perhaps my logo is not on every screen, but if I use API products, I can be in 10 times as many customer journeys. And I can have a realistic aspiration to double my sales, okay, when I'm in 10 times as many customer journeys. And if you've doubled your sales, that's going to pay for a lot of marketing budget to help get across your brand message. Okay, so we ask people to step through it, but it is a question, and it does reflect this belief system that we think is very established, but increasingly might be the wrong belief system to have about how bankers should distribute their services.
That's great. Thank you so much. Thanks so much from that. Thanks for the questions. We're going to start the Fireside Chat now. And I just would like to remind you that we will keep answering questions during the Fireside Chat. So please keep them coming. Over to you, Oli.
Great. Thanks, Kiki. Paul, fantastic session. You've got this unique global perspective, often traveling around the world. When you look across the entire landscape, I mean, who's kind of leading the way?
Yeah. We see a lot of leaders and laggards, but it's difficult to define an absolute leader based on geography, okay? Because there's different environmental factors. So there's developing economies, for example, where there's never been home broadband. There's never been home laptops. There's a whole new generation of people getting connected to the internet for the first time, it's all mobile, it's all cellular. And to give context, 10 years ago, 1/3 of the world's global middle classes, who are heavy users of banking services from financial brands, was in Asia. In 10 more years, so in a 20-year shift, 2/3 of the global middle classes will be in Asia. And those new consumers of banking services will never have had home broadband, will never have had home laptop. It'll all be mobile, it'll all be cellular. And in that context, there's banks in Asia who are only building APIs and not building apps because they don't think apps are going to scale. There's going to be hundreds of millions of people who are new customers with different languages. They'll be part of the platform economy. They might be managing their daily lives through a Chinese platform or through an American platform or an Indian platform. They need to expose banking APIs. So they're very advanced with APIs, but they're driven by their environment. Where we see in regions where we see leaders that are more progressive as institutions, we think it comes down to executive leadership, okay? Because things like talking about a new belief system and a new brand strategy for ecosystem, that's a C-suite job, okay? And when you're trying to use new techniques like APIs in new market segments with new partners, people get a lot more nervous about things going wrong than their tried and tested methods that they've used every day for years, and everyone knows what to expect, and most risk management techniques have been worked out, so a lot less nervous. And you know, when there's a setback in a very mature environment, people get over it faster and move on, whereas a setback in this brand new world where people are uncertain and feel like the sky is falling in. Okay, so as people are making the transition, we think into this new mindset and a new belief system. Not only do the C-suite need to fire the starting gun, but they need to stay engaged, okay? Because they're learning, people are learning, and you need the C-suite to constantly keep that strategic goal in mind. It's a setback, it's a mistake, let's fix it, move on, move on, move on. We're entering into a new, unfamiliar, strange market. It's like landing in a foreign country. We don't know the people, we don't know the best segments, we don't know the best products to sell. We got to get around the place and figure out how it works, and then we'll set very tough targets for ourselves, and then we'll scale. So we deal with a lot of organizations, and the ones that are least tentative and most progressive and get over the learning experiences faster are the ones where the C-suite call out the culture changes as well as the technology changes, and then don't just treat it as another project. Come back to us in 6 months when you're finished, because the odds of being a success in a very established environment is radically reduced if they don't stay engaged. So leadership comes from leadership.
Right. And how much permission does a bank have to get from, let's say, the regulator? You know, is that almost an excuse to execute? Because there must be some regions where I guess the local regulator has yet to say you must do this.
Yeah, the regulatory environments do differ. But bankers can get very frustrated sometimes with what the regulators specify, and some of that's justified and some of it's not. But you have to ask yourselves, why are regulators doing this or even considering this? Okay, because they issue licenses to people to run banks that will finance the growth of the economy. Okay, so regulators are looking at how the economy is evolving, and it's the age of assistance. Companies are connecting to each other. Consumer experiences are highly digital and highly connected. And regulators are setting a policy framework around consent and privacy and all of those conduct rules, but they're there to underpin good practice in a world that's getting connected. Okay, so we encourage our clients to yes, Article 58 might be ambiguous and frustrating, and if only the regulators around the world would get together and synchronize everything. Put that aside and ask yourselves, why are they doing this? Why are they doing this? And not only is it the age of assistance, and banks, if they want to stay connected to their customers, need to connect, but regulators, with whatever degree of effectiveness, are setting themselves up to regulate conduct in the age of assistance. So step up to the why, and we think that some banks that get obsessed about the regulatory micro decisions are at risk of missing the big picture, because then they send a team over in the corner to deal with the regulations, and what they should be doing is getting the whole organization to consider, how do we develop and persist with our brand in this new way of services being designed and delivered and consumed.
Great. So I guess I see a common kind of dichotomy of execution between those that just see it, open banking as a regulatory tax, to those that are desperately trying to engage with fintechs, perhaps desperately trying to spin up viable ventures within larger groups. There's a lot of, so if we shift perhaps the conversation from regulatory to the innovation spectrum, there's a lot of innovation theatre going on in the industry. I mean, what are some of the kind of common pitfalls that you see?
I think most of them are cultural, in that I think it's a step forward and a step back to create an innovation department in the corner where everyone takes their ties off and you have beanbags instead of desks. Okay, it's a step forward in that we need to loosen up and think about doing things in new ways and with new partners and in new segments. But at the same time too, with the wrong leadership or insufficient leadership, it becomes, well, that's their job, and incremental minor changes is business as usual. So in the context of that, there's a socialization challenge right across the organization, and I feel for some traditional banks, sometimes for fun we say we think they're making progress because we see the suits, okay, with the ties on, but actually talking in detail about the culture of the ecosystem and how do I grow, and yes, I need to do the governance, and yes, I need to do the risk management, but how much is enough, how much is too much? And so therefore, you have to ask yourself, what does the ecosystem want from banks? They want stuff that non-banks can't do. They want stuff that you can't do without a license. All of that stuff that is regulated, because badly managed banks blow up economies, so therefore they get regulated. So once you start to say, well, what do we have that's valuable and rare as a bank that's hard for non-banks to imitate or substitute, that's the core. It's payments at high scale, it's loans at high scale, it's deposits at high scale, it's investments at high scale. And that's the old systems. You need to get the data abstracted out of those systems, turn it into APIs, start to learn the feedback from the developers. So there is no shortcut. And the risk is that innovation theatre, which can be superficial, delays the real innovation, which is, what do we do that no one else can do because the ecosystem wants it?
And this kind of ties into my next question and something you just referred to earlier around failure and learning.
Yeah.
When you're working with C-suite, do you talk about that in perhaps a bit more detail? Because I think that I see others sort of pronounce it as if this is okay to do, but actually, I think when it came to it, failure would not be accepted, and heads would be removed.
I think you have to connect failure to projects culture. Okay, so why does a traditional organization fear failure so much? Because projects are terrible. Okay, they are really, compared to business as usual, they're incredibly difficult to execute. They are temporary and unique management structures full of people who are reporting to different people on temporary assignment. Most of them don't reach their goals. And inevitably, the vast amount of work they do is not reusable. So when you're trying to innovate and partner, particularly through projects, failure is a horrible prospect. A, it's likely, and B, it's really expensive. Okay, so I don't think you can just say failure in isolation. I think fear of failure comes from feeling that there's no alternative to projects. Okay, and they're an expensive way to fail, because for all of those reasons we just said. So in that context, when you're trying to say, listen, API products, if you systematically start to build them and use them and market them and get feedback on them, your failures are far more economic. They're far faster. Okay, the stuff you did to reach the failure far faster is reusable. A lot of it's reusable, and you're actively marketing the outcome from your innovation to not just the first person to use it, but to the next 100 who could use it. So I think if you when people say, well, listen, everyone's afraid of failure here, people are afraid of failure because they think there's no scalable, valuable alternatives to projects culture. There is API products culture. Okay, and I think once that understanding starts to come, and then crucially supported from the top, then the idea of partnering is API enabled. It's reusable investment. I can exit quickly if the partner turns out to disappoint, they don't produce the volume. It's reusable, there's automation behind it, I have a marketing program. It's an entire new belief system around how you're going to collaborate than projects. And it's awful, I hate it, how do I get off this thing?
Yeah, great. I had a moment of realization actually this year when I was in a forum of maybe 18 C-suite of MIA insurers, mainly CIOs. And the topic was ecosystems. But I very rapidly realized actually that quite a few had come to that session with a mindset that an ecosystem included kind of strategic alliances. So I had to really kind of bring that room along into sort of saying, well, actually, this is our perspective. Yeah. Is that something that you see in the world of banking as well? Because, I guess banks have been at the core of an ecosystem.
Yeah.
I'm thinking of the Medicis here. Very vibrant ecosystems for hundreds of years. Right?
Yeah. Oh, sorry, I'm not saying that strategic alliances will never be used, but if you want to have 1,000 partners in an ecosystem driving your growth, you won't do it through strategic alliances. It has to be API-enabled partnering. I do think there's a key part of the cultural shift. So you have to say to people sometimes, listen, you're talking to fintechs at the moment, or you're looking at potential partners, and you imagine who it might be, and you organise a lunch. You talk about how you might collaborate, and then you assemble projects in your respective organisation. even this description of it is slow. Okay, but consider what you define by a partnering opportunity. Should it be when somebody who you've never met has started consuming your APIs, and not just consuming it, doing it in ways that you would never have thought about, is bringing your services into new segments that you never reached on your own. They're paying for the privilege. Now it's the time to have a lunch and say, should this be a strategic alliance? So coming back to the idea of treating developers as customers, you want as many possible partners at the entry level, and then begin the filtration process through API monetization. And then, so if you think about fintechs, and banks have been talking to a lot of fintechs, and there's been a lot of lunches and lots of beers and lots of coffees, the question should be, now can you use APIs to filter those fintechs that want to talk to your bank into those that can just talk, and those who can talk and actually simultaneously drive traffic into your organization through your APIs and pay for it.
Right. Great. And I see there's a question that's come through that's somewhat related to the theme of ecosystem. So let's ask this one. Does Google, or well, I'll just rephrase it slightly, has Google created a marketplace for financial services, or will you do?
It's a very beguiling title, marketplace for financial services. Financial services is an incredibly broad church in terms of what it offers, from the most sophisticated investment clients down to the simplest startup or junior savings account. Google is a global organization. So in the context of, has Google created a marketplace for financial services, it's hard to describe what that might be. Okay, there's no doubt that if you step back and consider ecosystems as a place where there are connected experiences across their favorite brands, Google is a very popular brand. People connect through Google Pay, through banks connect to Google Maps, they connect to all sorts of Google digital assets. That type of, are you going to create something monolithic where you can see it's a connected economy in the age of assistance? Google has vast numbers of APIs, vast numbers of collaborating partners. Step back from thinking that there's going to be huge moves by horizontal organizations or vertical organizations. People should consider what will be the design of the overall marketplace for all systems and for all services. So you're going to find insurance companies are going to be dabbling in segments that they would never have touched when they had their old business model, but now will make some money out of stuff that's very partially related to insurance. Banks will start to make money out of non-banking activities in ecosystems. So we think that developing strategy based on the positioning of other companies is increasingly impossible. So 10 years ago, you could do a strategy session and everyone does the SWOT analysis on the wall, strengths, weaknesses, opportunities, and threats. And when fintechs came along, bankers would write collaboration with 100 fintech names down as an opportunity, and then they'd put the same 100 fintech names down as a threat. Okay? And all that said was, you can't devise a strategy that everyone in the company understands and is pursuing based on what are those 47 rivals and potential rivals doing now. Okay? If there's a big shift in the design of the market and how it operates, you have to shift your positioning towards that design. So analysts have described strategy of it's a plan and it's a position and it's a pattern of activity and all different ways to look at it. And we think the pattern of activity is changing radically. Follow the pattern of activity in terms of how you behave. Trying to figure out what 100 other companies are going to do might be an interesting discussion to have over coffee. However, it doesn't produce anything sensible for your organization to figure out in terms of its priorities for the age of assistance.
Great. So let's say tomorrow you go home, and on your doorstep is a letter from a bank with a very attractive offer, and you want to become the CIO. Okay, you've had enough of the Google kale, the random inflatable dinosaurs, the AstroTurf, or whatever.
No more green trousers.
No more green chinos. Now you're looking at this future untapped technology landscape of AI, ML, APIs, blockchain. What's the right level of focus a CIO should have on this future landscape for APIs?
I think it was Thomas Edison said that genius is 1% inspiration. The 99% is perspiration. So for a traditional bank and the CIO, getting the valuable services out of the core legacy systems and into an API layer, there's going to be a lot of perspiration, okay? And there's no shortcuts. But as that's happening, the 1% of the time that's the most valuable is evangelizing for the change in market dynamics. And in some of those topics we've just discovered, looking for inspiration in what's happening in other service industries in terms of how they're using APIs and ecosystems. Focusing on developers as a new brand audience to make sure that they come to have the same respect and affinity to your bank as your customers. But arguably, say very strongly to banker colleagues, really the purpose of a bank hasn't changed. How services are designed and developed and delivered are changing across all service industries, but financial services remains quite a small, regulated, highly capitalized, tough business. It's not every business is going to get into it. We just need to rethink the services part of financial services. The financial bit mightn't change that much. We have lots of perspiration to get the financial services out of the old systems into APIs. But then more broadly, see it as a huge opportunity. Okay, there's going to be 10 times as many customer journeys we can be in if we have API products that can connect. Okay, so I don't think being CIO of a traditional bank with old systems is an easy job. It can be made easier if all of these belief system issues are surfaced and discussed at the top of the organization. And then once everyone starts adopting the same mindset and going in the same direction, any organization can produce phenomenal outcomes.
Great. We're coming close to the end of the time for the Fireside Chat. We'll obviously have audience questions in a moment. You mentioned the constrained issuing of licenses, but I guess that probably banks have been, maybe complacent is the wrong word, but there's been the safety net of that. But obviously that has changed to a degree, right? There's been more that's been issued. And it kind of ties into a question really around trust as well. So there's a safety net of this very valuable concept of trust.
Yeah.
How much can banks rely on the existing license world, regulatory license world, and their perception of trust in the marketplace to protect them from disruption?
I think they worry too much because many of the new licenses that have been issued are to initiate financial transactions. They're not necessarily to settle financial transactions at scale. Certainly, a license to take deposits from the public is still something that regulators don't, hand out too easily, because a public panic and runs on banks is something that can cause a 10-year recession in your economy with a loss of confidence. So yes, there's a lot more licenses, and with PSD2 and open banking initiatives to allow non-banks or more lightly regulated financial institutions initiate payments. But much of the profitability of the industry is driven by the ability to take large amounts of deposits from the public, pay 2% on average, lend back to the public, possibly tend to be to younger businesses and younger people at 6 or 7% because you need to cover the small number who don't pay back their loans and other risks in relation to that process. So in the context of that, I don't see, licenses to build a balance sheet being thrown out too easily, because these balance sheets, the health of these balance sheets are connected to the health of the economy. So I do think that banks need to get their heads around what is initiation of payments and the abstraction of account data, and what actually is the providing of core banking services, and then recognize that in this evolution is opportunities for partnering at scale that they never had before. But these opportunities will mean nothing if they don't have API products to make those partnerships fast, flexible, reusable. And in time, the market will get to a new steady state with this new dominant design of how things happen. And my personal view is that banking will thrive and will expand because of the expanded opportunities in ecosystems. The question is, which banks will make the transition effectively and which banks won't?
Fantastic. A great summary there as well. If I just go into perhaps some kind of takeaways that I've really learned from that fantastic conversation. I think, I found really the position, how we position this to be really valuable. Right? I hope to the audience, no matter what industry, just kind of this a reset of the opportunity for the industry and no doubt for your business, the positioning around the criticality of leadership, not only just understanding this, but really continually driving it, and that developers are customers and should be prosperous. I love that idea. And then I liked your idea that with digital transformation, there's often this focus of new things and new ways, but critically stopping the old ways. Don't forget that very important point. Thanks very much, Paul.
All right, thank you very much. That was really interesting. Now we're going to take some more questions from the audience. And as a reminder, please use the link here to ask questions, or click on the Ask Question button on your watch page. All right, so we have another question here. So what can other territories who have yet to do anything around open banking learn from what the EU and the UK have done?
I think there's actually quite a distinctive difference between how the EU has approached this and how the UK has approached it. So the UK had embarked on this initiative, which was driven to create more competition in retail banking before PSD2 came on the horizon, and in some ways definitely has an implementation body and has more precise guidance on how services should be designed. And for countries that are thinking about moving into the world of open banking, the UK provides a fantastic template that mobilizes your banking community quite quickly. Where I think the EU is interesting globally is it has a huge regulatory machine, because since the 1960s, Europe has been creating a single market. Okay, so there's perception that this is all new red tape. No, it's just a centralization of red tape. And Europe hasn't been leader at digital, and they're working very, very hard to make that happen. But I wouldn't look at PSD2 in isolation. So PSD2 is looking for API connectivity between banks and third parties. It's setting out conduct rules. But there's things like GDPR setting out expectations around consent. Mm-hmm. There's European work going on around identity, privacy, and so I think where the rest of the world should look to is whether your regulator is going to be very precise about rules, or whether your regulator is just going to give general guidance around principles. What this work that's happening in Europe identifies is the world is going incredibly digital. Organizations are going to be connected to each other, and regulators will have expectations of good behavior and bad behavior. And it's in the interests of the leadership and the board of directors of an organization to go, what are these regulators defining as good behavior and bad behavior in terms of conduct by enterprises? And whether we have a regulation or not, we should take that as our cue to protect our brand in the long term when we write policy documents about being in ecosystems. What is our policy around consent? When we say to our customers we have partners, what do we mean by partners? Okay, when we say to our customers we're partnering with somebody, how do we make it absolutely plain and simple to them that we're doing this bit, the partner's doing that bit, we're taking proper care that we're choosing good partners, but you just need to read the instructions. So I think for organizations that aren't in the regulatory space, you have the luxury of not having to obsess over what are they saying in Article 58, but go back to the preamble of the documentation when they say why they're doing it. These are the type of outcomes that we want in terms of consumer trust and consumer protection, okay, and that these powerful organizations don't abuse their position. So when you read why they're doing it and the expectations they have generally about conduct, that's a very useful starting point, because one of the things that's holding up organizations getting heavily engaged in ecosystems is going, we don't have any policy documents from risk department about how we should conduct ourselves. Well, copy and paste the principles that the regulators are espousing, and maybe be glad you don't have to follow detailed rules that regulators have written.
Mm-hmm. Great.
Great. Okay, so thanks so much for the questions. I hope you found this useful and interesting. We also would love to hear your feedback, so please send your thoughts via the feedback form that you can see here, the link. And also stay tuned because we have the next online meetup coming in March 27. So please send your ideas so we can make the next edition even better. And with that, we're getting to the end of today's session. Thanks so much for joining. Have a great Christmas, and I see you next time.